What else I'm gonna do? Oh, so I have been working on a budgeting uh, workflow, a system that really helps with understanding where you stand financially, um, really understand your numbers, really dig through your things and find out where you are, and being able to bring in your situation. Um, and every individual has a different situation, but we have a lot of stuff in common. So it's kind of built around that commonality pattern, and really refined to, because time and time again I see people struggling with understanding their finances, really falling behind when it comes to expenses and paychecks and things like that, really, because these are some of the real struggles we all have. I have these struggles. I've had, no sense of what that bigger picture looked like. So I came up with a template. Let's go here and pull it up real quick. And visually, it might look very, very familiar because it's very, very basic. There's a pattern of pay here on the days that we get paid. And then we have our 2 weeks, working weeks. And then we have our month breakdown into 15 days, from 15 to 30, from 1 to 15. We got our month, we got our pay week, and then we get our pay. Then, and that kind of looks like this. So if we work, right now it's December 14th. And if we worked, the last 2 3 paychecks, this is what it looks like. Okay, so if I'm looking at 3 paychecks, this idea of this is to be able to look at a couple of things all at once, instead of just doing one. Okay, because it's really hard to look at. Right now it's kind of broken out into this thing, but I kind of want to explain what that is. Let's zero out a couple of things right now. I'm just going to do a 408 clear because I need that number. It's very important, that number. um Okay, so basically, what just happened was, say we worked our 1 week, 2 weeks, we put on our 40 hours in, maybe did a little overtime. This is at a base pay of 25. I've set up this template, but if you make anything uh, over that, great. And it's a very, very good place to be. And if you make anything below that, still really good, because we want to keep a pattern of pay coming in, and so we can actually have a system. Yeah, there you go. This is the paycheck, and it's kind of a breakdown of what that paycheck would look like once you get it. Some of the deductions, pre-tax, post-tax, tax, and then what that totals out to, coming out of our gross, which is our overtime and regular. So we get our net, and then that pattern just kind of continues all the way to, if we continue working every year at a rate of 26 times a year. Okay, so if it's a biweekly pay pattern, then that's what it looks like. I mean, this one is set up to go all the way to 2030, January of 2031, to kind of show us what that looks like. If we have a pay pattern, and if we get, somewhere between $25, and, we have, an equivalent to about $1,600 given it to us net, $1,600, depending on how many overtimes you do, and what that breakdown kind of looks like. But right now I have at least 2 hours of overtime, and then total per pay period, and a total of about 400 combined deductions out of our paycheck, so giving us about a 1600 ish. So that 1600, you can kind of see we work these 2 weeks and it gets thrown to us, and then we do stuff with it. If we This is what I see a lot of people make mistakes, and I used to make that mistake, is just kind of always staying with these numbers. Okay, so whatever our expenses were, and this is what we get, our expenses could exceed this number, realistically by a lot for that month. But since it's just a portion of a bigger picture, it looks intimidating, and it looks worrying, and it looks scary. So we want to step away from a, you know, looking at something at that event. Let's call that pay as an event, and all this combined monthly expense into that event looks really, really scary and bad, because we cannot do anything with $1,600. Okay, so what I like to do is say, look, if we continuously get paid that we work, 5 year goes by very quick, and you most likely will stay in one job for 5 years. But if you consistently have to work and keep up with your life, and you have responsibilities, you're gonna at least try to keep up a pay pattern that is given to you. And that's what this is, kind of just building that pay pattern. This was a biweekly pay pattern, and it's actually mapped out all the way through. And this math is basically from here, it's coming from here. Okay, so whatever that looks like, if you worked 9 hours, that reflects. Okay, there we go. So it's just the calculation of the math here throws our net into where would we potentially be getting paid. Okay, so we could be anywhere, and like we could be here, but we know we're going to work what hour. So we put that in, so we know this number, kind of. Okay, so what we're going to do is there's a couple of common numbers between these. So let's first talk about the pattern. Okay, the pattern of pay. Let's consider every pay as an event. Okay, every pay an event, because we want to isolate these as events, and then we're gonna um, design our life to, some other things kind of take place around this event. There's a couple of those that we know are going to be similar across. So that's what this is. Okay, so if we, let's just say that if we throw all of our paychecks into one account for the next 5 years, December of 2025, all the way to January, February of 2031, 5 years. And so this is a total of 137 paychecks. Okay, because I have put a one in front of all of these and getting a count from the totals row of this table. Okay, I'm going to show you why that is. And so we can kind of see some math now. We're being aware of how many paychecks from the here to there. So if that pattern is kind of just, I've kind of built that pattern into this template, and then this is one table right here, one table by itself that takes some math from this pay. Okay, it takes math from the pay, but I want to do something different. Okay, so if we took the entirety of our paychecks and did nothing else, we just worked and we got the pay, by the end of that 137 paychecks, 5 years and a couple of 2 months, we would have, that much, 215K. Right? I mean, realistically, it's really hard to not have expenses and just consistently get paid and do nothing and get that there in 5 years. But we can still use this pattern to really, really, really refine our behavior and understand our money, how things work. So, like you can see, I have some numbers here. And if assuming like I'm at the bottom of the January 31st right now, but I want to kind of go up to the top. Remember this tab here. This is we can move this totals row. It's something, if you didn't know about Excel, that you can, if you have a table and it has a totals row, you can move it. You can move it and get your totals. So we're kind of doing a couple of things. We are understanding where, how many paychecks, and by moving this, we can kind of see our projection of numbers. So there's a lot of math being done by decision, by choice, by decision, by pattern, but without really, typing and calculating things. We're only doing this in the setup phase and then refining it and things like that. So because a lot of the numbers are just, if I go and put them to zeros, you will see what I mean. Right now, let's just say that so what is happening is each one of these columns are accounts, and each one of these numbers are just a pattern, just copying the one before it. Okay, it's just like that, all the way up to the 137 from the beginning of the list we were doing. And this one is actually giving a total of our total rows. Okay, so whatever number from here to here it is, but it's actually taking everything that has monetary value in those accounts and giving us a total. Okay, so because there's other totals in here that I'll kind of touch on right now, because this is, realistic to our paycheck coming in, and we're not spending anything out of it. But there are some numbers here, but it's for the sake of explanation of what, you can kind of see if, if we put into an account $36, $5.50. But if we just save every paycheck, we save $36, we would have 5,000 by the end of the year. 72 is at 10,000. 360 is 50,000. Okay, if we saved every paycheck, if we saved that much, that's what it would be like. Okay, so I'm just saying, hey, take 50,000 and divide it by 137, and then it gives me that value, and I put that on the first one, and goes all the way and says, hey, that's 50K, and you can kind of see that. So that's what this is just to get some math. But there's a reason for these, because these are accounts too. They have predefined values pointing at each other, but as time goes on, we can actually, when we're here in time, and then comes time that for that event to happen, then once we cross that, the exact numbers go in it. Okay, so we have projection, exact numbers, and then kind of that's how it trickles down. So let's keep this all the way at the bottom. Let's see, I've kind of frozen the pane so we can always see whatever is on the top row, and then a little bit on this date row. This is pointing at that totals row. Okay, it's pointing at it, this top first line. Just we don't for the sake of doing our math, we don't want to go all the way to the bottom to see some of the numbers, but we can kind of see them right away at the top. Okay, same numbers. If we get consistently paid and do nothing, this is how much we would have. So we can kind of keep an eye on this row as we adjust our numbers and see what that behavioral kind of thing looks like. Okay, so now we figured, hey, we built the pattern of what we get paid. We built the pattern of the pay structure. We can, as you go, you can kind of just adjust these to what you get paid, what your expectations are for raises and things like that, so you can make refine adjustments. So let's erase some of these things because they're not necessary for this portion. We'll come back to them. Like I said, yeah, now it looks 0. If I put them back, if we save that much per paycheck, that's how much we would have at the top. Similar with those two, 5,000, 10,000, 50,000. But we want to put zeros here for now because that's just a template thing. Okay, so all right, if we get paid this much and we have a monthly responsibility of rent, and let's just put that there because we have this that biweekly pay pattern built on here as well. All of them have it because we want to do something. If I say that I have a $2,000 responsibility to pay rent a month, okay, every month from right now all the way to this is mortgage, this is thing, and considering 37 paycheck pattern, but this is only because we have a month breakdown into 215 days. It's a 1 times a month event. Okay, so our highest fixed cost, our mortgage or rent, the highest cost, we can see how much that is right at the top because this is what's equaling out to at the bottom. So how much do we need to actually, if we were to cover that, how much we need to pay from our paycheck? Okay, because if we live paycheck to paycheck, we can't cover it. Even if we do 2 paychecks, it's going to be 3,200. 2,000 is gone. You got 1,200. And that's still like it's a very especially for other high costs, it's really troubling. So we want to actually figure this out. So this template, this way of working into financial situations is really helpful to categorize things, understand them, and bring out things and then find out what are we working with. And another thing that kind of broke off, this was another high cost. This is like very similar to my situation, except the rent. The rent I have about 2,200, but this one is very similar. So, but I'm gonna keep it at $2,000, and once a month we would have paid $126,000 in 5 years. Similarly, if we had high costs like car insurance, like internet, like electricity, minus 55. These are very realistic for me. So you can kind of see at the rate of 440 a month. It doesn't matter where it's happening, but I'm kind of just putting it up here to understand, get that math, because we need it to understand. Just I'll show you what to do here in a second. So we can kind of see we have this, and we have this is how much we get paid. This is our expenses. These are our high cost expenses right off the bat. I'm not forgetting about any of our other expenses, but there's a reason the way I'm doing this, because you can kind of see we are left with 61K once these costs are put in, rent and a couple of high costs that periodically happen that we can't either function without, or not having it is a trouble, and things like car insurance, other things. That's pretty much a setup here. So basically, what I'm trying to do is, if we, let's say, move 1,000 from our paycheck here, only 1,000, the first 1,000, we've already covered our rent, and have a surplus of about 11,000. Okay, because as time goes on, this pattern of pay outpaces our rent, and at some point we are above that, and it's not that far. Like, I think it's every um, every 9 to 12 months or something like that. Then that we are outpacing it by 2 paychecks or something like that. So that's you can see we're in a positive by just moving that first 1,000 here. But the way we move it is not from going into an account and moving it. We're basically just like, it's pointing out to, hey, that equals that, because our employers usually allow us to break off our paycheck into at least 3 to 5 sometimes different accounts. So we're just saying, hey, send the first 1,000 here. If your rent is lower, you don't need the 1,000. Right now, I might not even need 1,000. I might need about $950 a month to cover my entirety of my rent, comfortably, I guess, something like that, and then be left with like a $5,000 surplus. 960. Let's do that, 960-ish. Okay, so you can kind of see how. But what I do is a little more, do more here. That way, there's less left here to do other crap with. So basically, you're putting things on in its own category and doing that. Okay, so on here, again, our high expenses, if we do only 225, we outpace that 400. Okay, because twice a month, sometimes 3, outpaces us that number. So right now we've kind of broken off. We're not spending as much on, like, per paycheck. We're not doing as much to cover and be left with more. And then we are still left with this, to do something with. But this is obviously at a high rate all the way through. But you can kind of see the math kind of just works. The pattern just kind of works. Everything just works. You don't have to, you can kind of just move this up and down to see if any of them head negative at some point. But most of the time, at some time it just outpaces it. There's no question about it. I'm just going to go to any section, see I'm not in negative. That's pretty much the idea of this whole thing. Experimental pattern way of looking at things. And this is like a kind of thing I wanted to build my system and things like that to show, some helpful tools and things like that I'm working on, and share them. And we can kind of see we are always in the positive. Everything's in the positive. And even our, our net worth is growing. Okay, because what we're actually doing is we are actually allowing a tool that has pre-built, experience, pre-built good advice, to kind of help us with understanding our finances, instead of just taking advice. And because sometimes it's really hard to take advice and be able to use that, because we are still not really comfortable with how we do things. So like I said, and then this means that you can increase your rent from, mortgage to something better over time. And in 5 years you can, pay a little bit more in mortgage, like halfway through this, like let's say in 2027, like not that long later. We started at 2026, mid 2027, end of 2027, we can, pay a 2250 mortgage. or 25, but then increase this by about $100. We're still in the positive. So we moved into a better mortgage or rent location by just, earlier was 1,050. We increased it by 50, but we went from 2,000 to 500 to 2,500. So like $100 equivalent to $500 in. But do you see what that, being able to look at this big picture instead of just and there's more. Believe me, there's more. Okay, and our high costs, our car insurance, our internet, and everything else was paid for too. Okay, now this is what we're left with from our paycheck. We've broken off two sections of it automatically. We've told our employer that, hey, the first 1,050 I want to go in this account, and then, we give the routing number and then account number and routing, and we want the next $225 to go into another account, and whatever is remaining to just throw it in my last account, where I'll be using my, supporting my credit card debt or student loan debt or just my other day-to-day expenses that I would, carefully do, because now we were working with a small budget, because most of the time this is what it feels like anyway. Okay, so we've broken off the two for those two purposes, and then the third one kind of like this. So one account is usually getting the highest to support our rent, one account is getting a very moderate amount to cover our fixed high cost fixed expenses, and then one account to actually do this other kind of expenses that we have, and these are usually food and gas, because they're kind of just spread out throughout the month. And by food, I mean food that you actually go buy to come home and make other food with. So you're restocking up with things, vegetables and dry vegetables and things like that to actually make food with, not fast food. Okay, let's remove that portion to, ours was, this is how much it was for us to do a month to restock. Okay, that was for our food. And this one was, I put the food in our from 1st to 15th because the first of the month we kind of stock up on things, and then the rest, really, and then I put my gas on the second credit card, where it was a spotty. We were driving two cars. You can see one car takes $35 to fill, and then one car takes $17 to fill, from whatever they were left off at. And this is like a total from. So you can kind of really break things down this way, and it really helps understand your financial, like, and over years you can see how much that is, your food and your gas, totaling about $24,000. Okay, and this is what the remainder of our pay is going. This little chunk of your pay is this $290, and then it's $300 based on how much overtime you do, because the overtime gets thrown on here too, because it's whatever is remaining after these two. Okay, so you can do a little overtime to kind of just give this a little boost, 1 hour, 2 hour here and there, not a lot. Okay, now we can kind of see, and let's even throw our, maybe we have some fun things that we do on another credit cards, like at a rate of $40. We have a subscription for 20, and then we go to a movie, so we have another $2,800 per 5-year expenses across. These changes, I'm sure, month to month, day by day, especially at first, it feels overwhelming, but once you actually refine it and take that fuzz out, this is why we're doing it this way. So the fuzz kind of just separates itself out. We're not really attempting to make a budget. We're not really attempting to make I have a hard time looking at it 1 month. I want to look at 3 months, 6 months, 5 years, 10 years, 15 years, 40 years, our entire life. Okay, so I can plot and understand and see what things are, just at a different level, at a higher numbering level, based on this kind of a setup to help me make decisions and really take out the fuzz. Because what we normally do is we look at our paycheck as a whole, the $1,500-$1,600 that we get, and we know that we got to buy food, we know that we got to get gas, we know that we get bored and tired of paying rent and having other insurances, everything come up, and then we gotta go watch a movie or something. But then the other thing we do is we constantly just buy, $20 here minus $50 on this day, and $300 on here, because this is what I did too. I mean, everybody does that. You could kind of keep an eye here and see how in each credit card, whatever day it is, because each one of these rows are a day, is what we consider. You spend $6, $3, $5, $8, $9, just in food and whatever, and you're throwing yourself, you're decreasing that potential, remaining savings kind of just thing. This is the fuzz. This is that. These are the numbers that we want to just and not do. This is the activity that we don't want to have. Okay, we want to set our important stuff and set it right, do it right once, and just simplify it. Because this is very, very simple. It's if you just only look at this section of your math, okay? Because there are some things that we absolutely know because we bring it in. Okay, we bring our rent. We look at our just look at the food only for 3 months or 1 month. See what you actually buy to make food at home. I mean, when it comes to this in the credit card thing, just take a piece of paper and write that down, like I have done here. Okay, I've put my rent. I just went on and I started doing this for December. Put my rent, put my insurance, put my internet. This is about $55. I know I haven't put it in yet because I haven't paid it. But I'm just putting everything else. The food that we have bought, $12, 219 from Costco, and 37 just to restock our food stuff. And then this is for gas. So pretty much we are understanding the not so fuzzy things that kind of just, if they're by themselves and if we do everything right, we'd still at the end of the 5 years would have $61,000. But it's the other days that we are, the other days in between all of this. Let's just look at the credit card side. Okay, it's this, days that we shouldn't be doing anything financially, making decisions, is what will kill us. Oh, let me correct something because I made a mistake. If we did everything right, we'd have 14,000 because we would pay all of this. So, what I'm trying to say is a lifestyle that is, let's get all of our expenses of $2,879 a month that we spend. Okay, we have our rent, we have our insurances, we have our food, we have our gas, and we have our entertainment. Very little, very refined little. We're spending about $2,800 worth of expenses, and if we see just how much we get in net a month, we are left with 362. So $362 in that month, because some of these could be a little bit higher or different, but for the sake of this, some real numbers, because that's what mine are, and then very close. All these others are real except my rent. I haven't put that because I'm just trying to, do some math here. All right, even if I did, okay, let's say even if I did this at 2263, it's still pretty good. Okay, but we are trying to build a buffer on this account. We're trying to build a buffer on this account. Okay, we want this account to be supporting this account, these periodic stuff. This is why credit cards should be used, because what happens is, come in, first of the month comes in, you go, you do all your shopping because the 5th is due, depending. What we're going to do is, for example, we're coming from here and we have hit here, and this is that event. Okay, it's all the same across. It's an event across because it's supporting a variety of different things. All right, so this is where we pay our 274. Okay, and we pay our 40, the cards that have a balance. Okay, and we also look, I put 274 here, but assuming if this was 247, 274 every 15 days, we'd still be like, because look, that 274 is happening once, and then the pay is happening twice. We are outpacing, but it's actually because that's how much tolerance we have to buy something. We can go in and buy a $20,000 thing and just keep paying it off over time, and by the end of 5 years, we would have cleared that credit card, right? At a rate of 274 to like almost $500 a month. But that's why I had a couple of numbers here. So what I wanted to actually pay was 152.54 kind of thing. You can pay it off, but this is how much it would take to actually, still be in the positive. Off that, like this would be the kind of a pay pattern, because you can once that happens, even if it's not the due date, I would pay the 154 and pay the other 154 next month, similar to our 120. We just need to pay $85, but you get the idea. Okay, so it's just, what I'm saying is per paycheck. Okay, because we are then supporting our food and our, we're living at a cost of $2,800 a month with a $1,600 paycheck, but without the fuzz, without the unnecessary spending whenever the day we are alive and we just happen to have a credit card, and that having a balance. That's what really, really destroys us, that little pattern of, because what we want to do is be super lazy when it comes to spending and doing things all these other days, but just when we're not be lazy about putting our information in when it happens, and just, but this is like a and this is like the final math theory all the way through to 5 years, but kind of giving me the, but let's go all the way back up and just kind of do this per asset happening. All right, so let's go here. Okay, so when a month and a half we took it easy and split our paycheck. Okay, and then we paid some of our food and stuff. We can't really fix our situation. So within a month and a half, you can fix your situation by this kind of a breakup to support a $2,200 rent, to support a, I'm going to reduce that because that's still a little high for this setup. So, that way we hit our mortgage very quickly. Let's bring our credit card totals as well up. So basically, you can kind of see where we're getting out of the pattern of paycheck to paycheck automatically. We're getting out of the stress of not having rent money automatically. We're getting out of the pattern of having our fixed costs covered, insurances and all of that, not falling behind on those automatically. Then we're, because what we can do is set those up to be automatically paid. Because we know the balance is going to be there. We can monitor it, look at it, and see you have 1 month of rent already the month before. You can kind of see it, especially once you do this for like a month or 2, 3 months, then you can kind of see it. It will show itself. All right, let's bring this up to here too, to this event. We can kind of see we already have allocated for the entertainment subscription. We've already outpaid our gas and we still allocated a little bit to it, and we still have a little bit of left. Is this right? There's a little balance on here, and I wonder if I did this a little bit wrong. Oh, I changed that 20 to 80, so I'm gonna increase this by 160. Good. Yeah, there you go. Because our food, I changed that. There was like a $20 food at the end of that. I put 80, but so I didn't change. No, not, look, everything is in the positive. We're not really a month and a half and after we started. Okay, we went to our paycheck and say, hey, change that. Next paycheck it might not take effect. The very next one it will. So once that happens, but you can kind of see if we already just assuming that everything is lining up, but then that pattern is just starting to, like we have a rent already for our December all broken up for us. We are already paying all of our, the all of our things, and we have the budget money built up for it, and then we still have like $490 just in case. But that is actually for, you know that's where saving kind of just comes in. After this pattern is high because if we see, that's what is happening here. This money is still a little high for the credit card side. I have actually allocated way more than I need to on the credit card side. That's why our checking is hitting negative once it gets to that. Let me get here. If we put them side by side, we can see that we have allocated money for the credit cards, by a lot. Okay, this 200 is a lot because once the pattern gets proper, then at first maybe it's just a little, then we can go to 150. But this is just a placeholder for now. Um, see, and then we're positive here, positive here, positive here, and we have a little bit of buffers. Like we have a $4,000. We're ahead on rent by $3,000. This is December of 2026, 1 year in. That 26 paychecks for the 2026 year, and then two for 2025 year that we just kind of got started. So if you're in 2025 and want to get started, set that up so 1,000 goes in equivalent to your paycheck, your rent. Okay, just take care of it. Take care of that. Take care of this. See, that one income supports this whole process. Okay, and if you're a two household income, one can actually take care of that, and the second can just, if they're getting a $1,500 paycheck at that full year, that's 100% of that paycheck that net that they can save. So your net worth is now $46,000. One person is really taking care of everything from that setup, and then one person is saving aggressively, paying off aggressively, or something like that, just to get within a year really get your situation under control. Because you could come in with like a high credit card debt or student loan debt or some situation that you want to get yourself out of. This setup will, you will have a buffer for your rent, you have a buffer for your fixed costs, you still have support for your food and gas and entertainment. You take the fuzz out, be lazy on the other days that you shouldn't be spending, treat every pay as an event, and every first and 15 of the month covering that entire 15 portion of that month, and just religiously put some data around and use a system like this where um you have a way to look at the past, kind of just predict some math around your paychecks in the future and kind of have a breakdown of everything. Okay, because within 5 years, if you just continue this type of a behavioral fix at the end of 2025, that one person keeps 5 years. At the end of 5 years, at the end of 5 years, we would have, let's bring our credit cards down there too, just because we have high usage, credit cards, but it's not meant to be that. I think. I mean, people tell you it's not meant to be that, but we want to visually see why that is, because if we throw anything in there, it just kind of throws everything off balance. This is just randomly buying shit, randomly doing things, having expenses that are just buying food and Ubering things out and out. It's gonna kill your motivation, your understanding of money. It's just gonna hurt in the long term. So we can kind of see, if we still have all of our food and gas and entertainment, and we still have about $10,000 in credit cards to pay, um, it's still been, because it's allocated to it. It's allocated from our remainder of this account. Even then, we have about $11,000 in that account. At 10,000 to pay off most of our credit cards, kind of thing. Like if periodically you pay them, it's easily said than done, because we have expenses. We have unexpected ones, and we have all sorts of other stuff. But you can see we have a buffer being built. If an emergency comes, you can take it from your, um, not even touching this. If that's what you want to do, is like my spouse really likes to, just she's more comfortable having cash than anything else. Doesn't care about anything else. So there it is. Me, I need to have a buffer and then have a way to be ahead of rent, know exactly everything. Okay. And my fixed costs, have a buffer, everything understood and fixed. And whatever is remaining, if I work overtime and all of that, I can help support this portion of my behavior, our things, fix that, pay the student loan stuff. Because we have a surplus being built. We have our allocated money that goes towards credit cards and anything like that. So it's time plus a strong framework and a mindset that will get us out of, um, situations with a $1,500 paycheck, a big situation, a $10,000 credit card kind of balance that is being brewed up over time, paid off, a food and gas and movement and entertainment kind of just allocated and paid off, and our high fixed costs, actually allocated from our paycheck into a three-way split, because there's a lot of good advice people give you. I've had this trouble of, it's like, well, here's an advice. This is what I want you to do every month. Um, I love that idea. It's just, man, I want to see the advice 6 times in a row that applies to my situation, and if it's a good advice or not, if I should take it, if I should do that, or the advice is great, but where's that actual data behind it that I can actually understand how that advice is meant to be taken? Because that's where, um, you know, that's one of the reasons I have widened out my beard. Um, is just placing, having my own way of doing things, that have good advice built into it, behaviors, if it is situation understanding of things, or if someone uses this, they're actually they're going through, um like advices have been giving. There's been a lot of good advice. I'm building that advice into a tool, and then you using that tool, you're using that advice, my understanding of advice, and seeing it in like yourself, and building some more advice on top of that, which will it's all about perspective. We're condensing time, we're really pushing in a lot of time. We want to see the numbers as close as possible to each other, sort of like this. If I just look at our first of the month where our rent happens, this is what we're looking at. We're condensing that time and see all of it at once. Okay, the whole thing. We are going to be paying 126K in rent. We're going to be paying. You can edit these to, if you have $500 expenses, it's fixed. You can kind of see that it only takes that much effort to get there, even with our fixed costs or something like that. At least on these two are set up on the first. The other one is set up on the 15th. So I kind of want to do that, to just kind of look at that too. There you go. There is that gas on 15th, and there's the everything else on 101. So our food and our entertainment and subscriptions, food in one card, subscriptions and entertainment on another. Okay, food that we actually go buy to make food at home or restock our pantry or something like that. Not fast food, not spot buying food, because we want to work on our health too. Just good food, good behavior, good no eating out and stuff like that. Enough of that. Work on the health a little bit. Don't eat anything from. You just be lazy about eating. Be lazy about spending every day. Be lazy about buying something of B&H, couple of lenses and things. So yeah, that's pretty much the idea. Looking at stuff at a very high rate of understanding. But this idea is to um have a system structure built in, and then refine and understand what that actually looks like in a bigger picture. We want condensed time, stretch our um, pay, and have slots for everything. Because again, that's an advice that somebody, envelope system. But we were going way back into an actual automated system. The banks send it, the paycheck is sent, split it up. We already everything aligned up. We have our auto pay for the rent and the expenses auto pay from this account, and then we just focus on eating healthy, buying our food, and recording our data for gas and food. Just per monthly, just write that down, and but we can still log our stuff if you need to. If you want to, just if you're really tech savvy and you're Excel, happy with Excel usability, then you just write those down too, and just kind of refine that stuff and projections and things like that, because everything is pointing up to the month before it anyway, so you can kind of get a similar situation unless you change it, build up kind of for you. So that's pretty much the basics of it. That's it for me. We'll come back another day. I have a few other things to do. Catch you on the other side of 2030.